After a few years of relentless volatility, crushing market corrections, and skepticism from both institutional and retail investors, the cryptocurrency market in 2025 is beginning to stir once again. But this isn't just another crypto bull trap, nor is it the speculative frenzy of 2017 or the meme coin mania of 2021. This time, the resurgence of digital assets is being driven by a combination of macroeconomic pressures, institutional reinvestment, regulatory clarity, and deep technological advancements that may well redefine how the global economy interacts with money itself. The question is no longer whether crypto is coming back. It is which projects are poised to lead this new chapter. Let's first set the context. As we step into the second half of the decade, the global economy is undergoing a significant transformation. Central banks are grappling with the aftermath of prolonged inflation, sluggish economic growth in traditional sectors, and a rapid technological shift in financial systems. Meanwhile, distrust in fiat currencies, particularly in emerging markets, is rising. The dollar remains dominant, but cracks in the monetary architecture are widening, prompting investors, corporations, and even governments to explore alternative assets that can hedge risk, provide efficiency, and remain resilient against systemic shocks. Enter crypto, not as a speculative bet, but as a functional layer within the evolving global financial infrastructure. The narrative has shifted from moonshots and NFTs to stablecoins, smart contract automation, cross-border institutional, DeFi, and real-world asset tokenization. While Bitcoin and Ethereum continue to dominate the headlines, 2025 is showing signs of a diversified crypto landscape, where new use cases are driving renewed interest, and where a handful of coins are not just surviving, but thriving. Let's begin with the king, Bitcoin. Often compared to digital gold, Bitcoin's role in 2025 has matured significantly. Following the 2024 halving event, supply-side pressure has returned, tightening the availability of new coins and historically setting the stage for a price rally. But what's different this time is institutional involvement. Major banks have resumed Bitcoin custody services. Pension funds are slowly allocating small percentages of their portfolios into Bitcoin, and sovereign wealth funds in regions like the Middle East and Southeast Asia have begun exploring Bitcoin as a hedge against dollar volatility and political risks. In addition, Lightning Network upgrades have improved Bitcoin's transaction speed and scalability, making microtransactions more feasible. While critics still argue that Bitcoin lacks utility beyond its positioning as a decentralized, censorship-resistant, and inflation-proof asset gives it unique strength in an era of central bank uncertainty. At the time of writing, Bitcoin is hovering near the $65,000 mark. Next, we must talk about while Bitcoin is a digital rock, Ethereum is a digital economy. The 2022 merge and subsequent Shanghai upgrade laid the groundwork, but in 2025, Ethereum is finally realizing its potential as the backbone of Web3. Institutional DeFi is a growing force, and Ethereum smart contract infrastructure is still the go-to layer for real-world asset tokenization, decentralized derivatives, and compliance-friendly lending protocols. Major banks are issuing on-chain bonds and synthetic securities on Ethereum-compatible chains. Furthermore, Layer 2 solutions like Arbitrum, Optimism, and X Inc. have significantly reduced gas fees, pushing enterprise adoption forward. Ethereum's price sits around $3,800, but the market sees upside potential well beyond $5,000, especially with Ethereum improvement proposals focused on scalability and privacy nearing activation. Ethereum may not have the same scarcity narrative as Bitcoin, but its versatility and dominance in the programmable money space are unmatched. Beyond the giants, a wave of next-gen cryptocurrencies are emerging, ones that address real economic inefficiencies, target global trade infrastructure, and have actual user traction. Let's start with Chainlink. Often underappreciated outside crypto circles, Chainlink is the invisible engine behind decentralized data verification. With the growing institutional appetite for on-chain finance, the demand for reliable oracles has surged. Chainlink's cross-chain interoperability protocol is now being tested by major financial firms to bridge traditional finance with DeFi ecosystems. Whether it's updating asset prices, verifying insurance triggers, or facilitating cross-chain communication, Chainlink is foundational. Currently priced around $18, many believe Link is undervalued relative to its utility, with upside potential toward the $30–40 range if adoption continues. Another critical player is Solana, the so-called Ethereum killer that didn't die during the 2022 crash. Despite past outages and FTX drama, Solana has rebounded in 2025 with renewed vigor, with transaction speeds reaching 65,000 TPS and costs less than a cent. It has become the chain of choice for consumer-facing apps, NFT marketplaces, and even point-of-sale financial tools in developing economies. Large-scale developers are returning to Solana thanks to Firedance, a validator client upgrade that significantly boosts performance. SOL is currently trading around $110, but many are betting it could break $150, $200 if usage continues to scale, especially as the Solana mobile stack gains traction. Avalanche is another chain making noise, particularly in the enterprise space. Its subnet architecture allows for the creation of customizable, regulatory-compliant blockchains, a feature highly attractive to multinational corporations and government-backed digital initiatives. In 2025, several pilot programs for carbon credits, municipal bonds, and even digital IDs are being trialed on Avalanche. Strategic positioning between decentralization and regulation could make AVAX one of the quiet winners of this cycle. Currently priced near $25, Avalanche could easily climb to $50, $60 if enterprise adoption expands. Now, let's not forget Polkadot, the interoperability champion. While many chains seek dominance, Polkadot aims for cooperation. Its parachain model allows multiple blockchains to interconnect and share security, which has powerful implications for global financial networks. In 2025, several DeFi ecosystems, supply chain platforms, and even government-backed currencies are experimenting with Polkadot's infrastructure to streamline cross-border data and asset transfers. While its price remains relatively modest at around $7, its long-term utility could drive significant upside, especially if major countries in Latin America and Africa move forward with DOT-based integrations. A surprising contender in 2025 as crypto revival is Render, a tokenized platform that offers decentralized GPU rendering. Why is this relevant in a finance context? Because AI infrastructure and cloud rendering are becoming essential commodities. As AI demand grows and centralized GPU access becomes constrained, Render offers a decentralized solution that could disrupt cloud monopolies. Think of it as Airbnb for GPU power. While RNDR is currently priced around $9, some analysts argue its real-world application in AI gaming and virtual production could drive valuations well beyond $20. In the stablecoin and payments realm, Ripple's XRP is staging a comeback after years of legal uncertainty. With much of its litigation with the SEC behind it, Ripple is pivoting toward real-time global settlement systems, particularly in Asia-Pacific and Latin America. Several regional banks have partnered with RippleNet to facilitate faster, cheaper international transactions. XRP's focus on liquidity corridors and regulatory compliance gives it a strong foothold in emerging markets where remittance fees remain high. Priced modestly at 65 cents, XRP has potential for steady, rather than explosive, growth as it inches toward institutional-grade adoption. Also worth watching is Cosmos, a platform designed for interoperability and scalability through its interblockchain communication protocol. In 2025, many regional central banks and fintech startups are testing Cosmos SDK to develop local digital currencies and community financial networks. Cosmos offers a decentralized yet flexible framework that can bridge traditional financial players with Web3 infrastructure, making it ideal for government experiments in financial modernization. With a price currently around $9, Cosmos is still flying under the radar. And then there's Toncoin, the blockchain quietly backed by Telegram, which has over 900 million global users. With Telegram rolling out in-app wallets and micropayment features, Toncoin could become one of the most widely used digital assets without people even realizing they're reusing crypto. This stealth adoption model, especially in peer-to-peer economies, could be revolutionary. Currently trading around $7, Ton could become the most retail-adopted coin in the world, especially across regions like South Asia, Eastern Europe, and Africa. As we look at the broader market, one thing becomes clear. The narrative in 2025 isn't just about which coin will 10x. It's about which projects are solving real economic problems, integrating with existing financial systems, and building resilient infrastructure. Institutional investors, family offices, and sovereign wealth funds are no longer chasing meme coins or speculative pumps. They're looking at blockchain as a technological upgrade to the aging infrastructure of finance, logistics, payments, and identity. This new chapter in crypto is being written with a pen of pragmatism, not hype. Regulatory clarity in regions like the EU, UAE, Singapore, and even parts of the US has given crypto firms the confidence to innovate. Major players like BlackRock, Fidelity, and Goldman Sachs are not just experimenting, they're allocating, integrating, and building. Meanwhile, countries facing currency, devaluation, hyperinflation, or capital controls are exploring stablecoins and decentralized finance as viable alternatives to IMF or World Bank dependency. But with opportunity comes responsibility. As investors, we must go beyond the price charts and white paper. We must understand the geopolitical forces shaping adoption, the regulatory shifts that could make or break projects, and the underlying technology that separates long-term utility from short-term noise. The crypto comeback of 2025 is not just a market cycle. It has a global re-evaluation of value, trust, and autonomy in an increasingly interconnected yet fragile world. Whether you're a seasoned investor or just getting started, this is the time to research deeply, allocate wisely, and think long-term. The next wave of wealth, 1T, come from speculation. It will come from strategic positioning in projects that matter. So ask yourself, are you watching the right coins, or are you still chasing the ghosts of bull markets past? At Macromotive, we go beyond the noise to bring you clear, data-driven insights into the world of finance, global trade, and the macroeconomic trends shaping our future. Whether you're a crypto investor, a market analyst, or just someone curious about where the world of money is headed, this channel is your destination for grounded analysis and powerful financial intelligence. If you found value in this breakdown, make sure to subscribe, hit the notification bell, and stay with us as we continue to decode the forces that move markets and shape wealth. From digital assets to central bank policies, from undervalued stocks to emerging global trends, Macromotive is where the big picture becomes crystal clear. Thanks for watching, and until next time, stay smart, stay curious, and stay ahead.